Hello Dairy Today viewers. On behalf of your Market 360 advisory team here at Stewart Peterson, I'm Tom Mongovin and this is your week in review for July 27th, 2012. Taking a look at our CME dairy components, first looking at the block barrel prices this week, all of these changes you see on the screen there happened today on Friday, as the rest of the week was very quiet and had unchanged prices. Taking a look at blocks finishing at 170.5, down a penny and a quarter this week. Barrels at 168.5, down a penny. Butter was up, settling at 167 this week. Whey down slightly, and non-fat dry milk finishing unchanged on the week. Milk was lower this week as the second month contract, which is currently August, has been lower 9 out of the last 10 trading days. The lower price action was understandable early in the week as the grain markets dropped due to some wet weather entering into the forecast. However, later in the week when grains recovered their losses, milk prices continued lower, which was a bit surprising. Taking a look at our closes from Friday afternoon settlement prices, July, which will be coming off the board very shortly, unchanged at 16.67. August, which will be rolling up to be the front month contract next week, settling down 66 cents. September down 79 cents, and then the fourth quarter down anywhere between 21 and 39 cents. As we just mentioned, a very quiet week in the cash cheese trade until Friday morning. As a matter of fact, the block barrel average starting out the week just under 1.71 and remained unchanged through Thursday's trade. Today, there was a lot of activity as 5 block and 4 barrel carloads traded. All of these trades happened after prices were offered lower, and that led to the block barrel average finishing about a penny lower on the week to 169.5. The trend is still higher as I draw in some boundaries here, and that's something to watch going forward as we could be starting to turn over. We'll keep an eye on that going forward into next week. Here we have the August milk contract, and support had been holding for the past couple months even after it was tested several times. You can see we tested it here, and we did test it again earlier this week. However, this week we broke through that support, and now we are watching a different support line. We are watching the 17.17 level for 2 reasons. One, that is the low from the July contract. And 2, we have a double bottom formation coming in at that price. Taking a look at our double bottom, we see a bottom here and a bottom here that we touched today. If we break through there, we feel that the recent rally could be running out of steam, and we'd look for lower prices if we were able to close below 17.17. Looking at some bullish news, the weekly cheese and select storage numbers are now below that of 2011. This is positive for prices because it says supply is lower than last year. This is definitely trending in the wrong direction, and it could lead prices to rally in response to this. Here you can see from the green line, this is 2011 storage levels, and looking at the purple line with the most recent data, we are now 2% below last year. So something to keep in mind, especially if that trend continues, that would be positive for prices. Here we have the weekly dairy cow slaughter chart, and this is bullish as well as we saw a sharp increase in slaughter in the latest data. The latest data came in at 57,000 head being slaughtered, and given the weather and feed costs, this trend could continue higher. We were lower in the data from before this week, and that's pretty common. As you can see, 2010 and 2011 both saw some pretty low slaughter numbers at that time during the year. However, this week we had a sharp increase, and if that trend continues higher up into these regions, that again is going to be positive for prices. Looking ahead to next week, we will get to see if corn decides to finally break through the $8 mark, and if it's able to stay there after it breaks through. So far we have broken through very briefly, only to see a pullback. After a dismal week in the milk markets, will we get a bounce next week to get us back in line with the rising feed costs? That will do it for us. On behalf of your Market 360 advisory team here at Stewart Peterson, thank you for watching and have a great weekend.